VGT ETF, the best tech index for long-term wealth. What if instead of spending years trying to pick the next Apple, the next Nvidia, or the next Microsoft, you could simply invest in a single ETF that already owns all of them? A single fund that quietly captures the entire growth of the technology revolution, from artificial intelligence and semiconductors to cloud computing, software, and digital infrastructure. That fund is VGT. And the real question investors are asking today is not what VGT is, but whether it is still one of the best long-term wealth-building tools in a world where technology is evolving faster than ever before. Because while tech has been the strongest performing sector for the last decade, the question now is whether that dominance can continue, or whether it has already been fully priced in. To understand that, we need to go much deeper into what VGT actually holds, how it behaves in different market cycles, and why it has become one of the most powerful ETF options for long-term investors. The Vanguard Information Technology ETF, known as VGT, is one of the most widely used technology-focused exchange-traded funds in the world. It is designed to track a broad index of US technology companies, giving investors exposure to software firms, semiconductor manufacturers, IT service providers, and digital infrastructure leaders. Instead of betting on a single company's success, VGT allows investors to own a diversified portfolio of the most important players in the technology ecosystem. From mega-cap giants to high-growth innovators, VGT represents the entire backbone of the modern digital economy in one fund. In this video, we will break down VGT's structure, major holdings, growth drivers, risks, and long-term wealth potential to understand whether it is still one of the strongest investment options for building financial freedom in the long run. Before we continue, if you enjoy detailed investment breakdowns like this, make sure to like the video, subscribe to the channel, and turn on notifications so you never miss future insights. 1. VGT is a full technology ecosystem fund. VGT is not just a random collection of tech stocks. It is a structured fund that represents the entire technology ecosystem. It includes companies involved in software development, semiconductor manufacturing, cloud computing, cybersecurity, IT infrastructure, and digital communication systems. This means when you invest in VGT, you are essentially investing in the digital foundation of the modern world. From the apps on your phone to the cloud servers running global businesses, VGT companies are behind almost every digital interaction happening today. 2. Heavyweight in global tech giants. One of the most important characteristics of VGT is its strong concentration in mega-cap technology companies. A significant portion of the ETF is dominated by industry leaders such as Apple, Microsoft, Nvidia, Broadcom, and other large technology firms. This creates a powerful structure where a few dominant companies drive a large portion of returns. When these companies perform well, VGT can deliver exceptional growth. But when they slow down, the ETF can also feel the impact immediately. This concentration is both its biggest strength and its biggest risk. 3. Direct exposure to artificial intelligence revolution. One of the main reasons VGT has gained massive attention in recent years is its exposure to artificial intelligence. Many companies inside VGT are directly involved in AI development, including chip makers, cloud providers, and software platforms. AI is not just a trend, it is a structural shift in how the global economy operates. As AI adoption increases across industries like healthcare, finance, manufacturing, and education, VGT benefits from multiple layers of this transformation. It does not rely on one AI company. Instead, it captures the entire AI ecosystem. 4. Semiconductor industry as the growth engine. A large portion of VGT is tied to the semiconductor industry, which is the foundation of all modern technology. Semiconductors power smartphones, computers, data centers, AI systems, and almost every digital device in existence. As demand for computing power increases globally, semiconductor companies become more valuable. This makes VGT indirectly tied to one of the most important and fastest growing industries in the world. 5. Cloud computing expansion driving long-term growth. Another major driver behind VGT's performance is cloud computing. Cloud services allow businesses to store data, run applications, and process information at scale without physical infrastructure limitations. Companies like Microsoft and other cloud-focused firms inside VGT benefit heavily from this shift. As more businesses move operations to the cloud, demand for infrastructure, storage, and computing power continues to rise, supporting long-term ETF growth. 6. Historical performance and wealth creation power. Over the past decade, technology has been one of the best-performing sectors in the global stock market. VGT has consistently benefited from this trend, delivering strong long-term returns driven by innovation, digital adoption, and exponential growth in tech earnings. However, this performance has not been linear. It has gone through multiple cycles of rapid growth and sharp corrections. This pattern shows that VGT is a long-term compounding tool, not a short-term stable investment. 7. Sector concentration risk explained. One of the most important risks of VGT is that it is not a diversified market ETF. It is heavily concentrated in one sector, technology. This means if the tech sector enters a downturn, VGT will be significantly affected compared to broader market ETFs like SPY or VU. This makes it a high-growth but high-volatility investment vehicle. 8. Influence of interest rates on performance. Technology stocks are highly sensitive to interest rate changes. When interest rates rise, growth stocks often face pressure because future earnings become less valuable in present terms. Since VGT is heavily weighted toward growth companies, it tends to react strongly to macroeconomic changes. Understanding interest rate cycles is important when analyzing VGT performance. 9. Innovation cycles and future disruption. One of the strongest long-term advantages of VGT is its exposure to continuous innovation cycles. Technology is an industry that does not stand still. It constantly evolves through new breakthroughs in AI, automation, cloud computing, and digital transformation. VGT automatically adjusts to these changes by holding leading companies that drive innovation forward. This makes it a dynamic long-term investment that evolves with the economy. 10. Long-term wealth building potential. Despite risks and volatility, VGT remains one of the most powerful long-term wealth building tools available to investors. It provides exposure to the most innovative companies in the world, all in a single diversified fund. As the global economy becomes more digital, the importance of technology companies will continue to increase. VGT allows investors to participate in that growth without needing to predict individual winners. VGT is not just an ETF, it is a long-term bet on the future of technology itself. It captures the growth of AI, semiconductors, cloud computing, software, and digital infrastructure in one investment. While it carries sector concentration risk and higher volatility, its long-term growth potential remains strongly tied to global innovation. For investors who believe technology will continue shaping the future economy, VGT remains one of the most efficient and powerful tools for long-term wealth creation. If you found this analysis helpful, make sure to like this video and subscribe for more deep investment breakdowns. Comment below and share your opinion. Do you think VGT is the ultimate tech ETF for long-term wealth, or is it too risky due to its heavy tech concentration? Your thoughts matter, and I read every comment. Thanks for watching, and I'll see you in the next video.